Hello and welcome again to the series called Accounting for Bitcoin. This is part 3 where we will be looking at accounting for Bitcoin as a store of value as opposed to a medium of exchange. Now, we will have the same transaction just like we did in our previous video, which was for medium of exchange. So the amount of Bitcoin and the amount of Namibian dollars will still remain the same. The triple entry will also be the same, but in this case the money won't come in our Bitcoin account. Instead, it will go to our investment account. So we will debit our investment account and we will credit our sales, because we are going to account for our Bitcoin as a store of value and not as a medium of exchange. And then finally, our last entry will be on our public ledger. We won't go and verify this transaction because we already did that in part 1, where we accounted for Bitcoin as a medium of exchange. Now let's head over to our statement of financial position. And in our statement of financial position, our owner's equity and liability section will remain the same, because sales did not change at all. The change that did occur is in our assets, and now our Bitcoin is no longer under our current assets but under our non-current assets, because we are not accounting for it as a medium of exchange. We are accounting for it as a store of value. Our Bitcoin, we will treat it as an investment. So we won't treat it like bank or cash, where we will be using that funds to pay for our creditors or to make purchases for expenses. We intend to keep the Bitcoin for a long period as an investment. So those are the two different ways to account for Bitcoin. If you think of another way to account for Bitcoin, you can leave it in the comment section. I'll be happy to do a video on that as well. But for now, thanks for watching. Comments, questions, concerns, you can leave them in the comment section, and I'll see you in the next video.